Live from the Money Show in beautiful Seattle, Washington here. I'm Adrian Manns. I'm here with Danielle Shay. We were just chatting about the consumer discretionary sector and what's going on with all this consumer debt that we see taken on, and who's to benefit from that?
Yes, that's correct. So right now we have incredibly high levels of consumer debt. We have credit card debt, mortgage debt, auto loans. These are all huge. And on top of that, we have an e-commerce industry that's just skyrocketing in the age of Amazon. So you have to think about that and say, who's making money off of that? Well, look at the credit card companies, look at their technicals and their fundamentals, and they're skyrocketing.
So if you're looking at an option strategy that's devoted then to consumer discretionary, right, are you focusing on the index first? Are you looking at the IXY and then saying, you know, this is where I'm looking for key support and resistance, or are you sort of broader based in your approach?
Yes, definitely. So I always look at the index and sector first, and that's why this is kind of interesting, because you have MasterCard and Visa that are a part of the tech sector, XLK, right? And so what you've seen over the course of the past few weeks, we've had many tech companies that have been a little bit weak, but the credit card companies, they just continue to skyrocket. And so what I look for in the options market is, number one, they're typically great to just continually sell put credit spreads, because they have a beautiful 5-star pattern that's a nice trending pattern. You can just sell put credit spreads, sell put credit spreads. But I also like to identify moments of consolidation and trade it a little bit more aggressively with long calls or breakouts on a squeeze.
So within the consumer discretionary sector, do you ever look at the luxury retailers, or are you just focused on the online retailers now?
So it's been a little bit interesting because the retailers have been impacted by the trade war. So you have retailers such as Nike, Under Armour that potentially are going to have additional tariffs on them. So some of those have been weak. But what I'm looking at is, okay, if people are spending money online, what about the credit card companies, the online banks, the payment processors like PayPal? So even though I've been focused on the consumer discretionary sector for the majority of the year, once the tariffs hit, it got a little bit shaky, and so I started moving a little bit over to the payment processors.
And if there's more tariffs?
Yes, so if there's more tariffs, we need to look at specifically what is going to be impacted by the tariffs, because at the end of the day, the companies are going to pass on those costs to consumers. And so if the tariffs do hit footwear, then we need to watch out and back away from those stocks for a little while.
Right, because the next round of tariffs are pretty much going to hit the consumer directly.
Exactly.
Right? Okay. All right, well, there you have it. Check out Danielle Shay at simplertrading.com. You can also see her newsletter at 5startrader.com, of course. And for the Money Show, I'm Adrian Manns, live from Seattle, Washington.